Are you a wine drinker? Not in the mornings.
Not really. I saw that Sula Wines is coming on your show. That is one company which has kind of disappointed. I don't think it's operating at its full
So tell us, we have the management joining us in just a bit, right? What is the one thing you want asked? We'll ask them.
I think that as a category in the entire alcohol sector, wines should have the highest growth category, but somehow the numbers always fall short in terms of volume and top line growth. So I just feel that it's got as a story, as a segment, as a business, it's fantastic. But why don't the numbers come through?
Let's start right there, Deepan. Let's start right there, because that's exactly what was crossing my mind, not just looking at the third quarter, looking at overall the performance this year. Rajeev Samant is already there. I think he can hear all the tough questions coming his way. Rajeev, morning. Before we get started, for the benefit of viewers, let's put the numbers up. Good morning. Good morning. Let's put the numbers up. For the third quarter, Sula, the revenue is down. It's about 1.4% lower. The margins have also come under pressure. Year on year, when the company was growing at over 30% margin, now that level's come down to about 26.5%. And this is not just a third quarter story. Yeah, those are third quarter numbers that are flashing in front of you. We should also pull up the 9 months numbers. It's been a really sluggish year for Sula, and I guess that's where Deepan's question comes in. Look at 9 months. Revenue is up about 1.2%. And again, 9-month margins also are way lower than where they were in the same period in the previous year. So that's where I guess the street's disappointment is coming from. Rajeev, there you go. You have all the questions up there. What's happening? This whole talk of urban consumption slowdown, this is only a couple of 1-2 months old, right? But why has it been so sluggish? And do you see anything improving in this quarter, Q4?
We do see things improving. Let me put it in context. This urban slowdown, we have definitely noticed it. And it's definitely more than 1 or 2 months. I mean, I would say that this story is one of the last 6 months at least. Look, I want to put things in context. About a year ago, for a couple of years, we had terrific growth. Our margins went to unprecedented levels. And I always maintained, even at that time, that the margins had reached unsustainable levels. We had everything coming together perfectly. I had said, even at that time, that these margins are going to come down in the future. That's what's happening right now. Perhaps things have moderated a little bit more than we would have expected or would have liked. But I do definitely see the green shoots for the future. And we are very hopeful for the future. This budget that's just happened just a few days ago will definitely put more money in the pockets of our consumers. We have been seeing stress among our consumers and among the consumption of wine overall across the country over the last 6 months. And we definitely hope to see a turnaround in that.
So you're saying it's only linked to the environment and nothing else. If you could just break this down, the green shoots, if you could break them down further, because in the third quarter, even the value segment, I mean, not prestige and above, but even some of the, the economy segment, as you call it, even that didn't fire up. You would expect that maybe at that end, things are better. The premium, I think volume growth was about 3%. The economy segment, the volumes were down about 5.5%. So then where are these green shoots coming?
So, when you say it's only the environment, I would like to say, I mean, there are other things as well. I mean, definitely regulatory this year has been an issue. So our fastest growing state, for instance, Telangana, there have been, I'm sure you've seen the news recently, a lot of issues with payments from that government. And so we've had to slow down, purposely slow down our sales in Telangana. That's been something that has definitely hit us in this quarter. A state that was growing for us 25% plus, we've had to purposely bring down the sales in that state due to payment issues. Very happy to state that those issues seem to be getting resolved. So we again had a perfect environment of regulatory tailwinds a couple of years back. But over the last year, states have been increasing taxes across the board. Wine has been hit because states, unfortunately, are not distinguishing so much for wine versus spirit. So we are beefing up also our regulatory affairs.
Rajeev, sorry, since you brought up Telangana as a specific state, what's the contribution to your overall sales pie from Telangana?
So Telangana has now crossed 10% of our overall sales, but it has been the fastest growing major market for us over the last 2 years. So, where it was something like 7% 2 years ago, it's crossed 10%, whereas Maharashtra and Karnataka, our top 2 states, have been coming down. Our issues have been very specific in Maharashtra, in Mumbai and Pune. These are the two markets which have been really lagging for us. I must say that the rest of the country, apart from Maharashtra and Karnataka, is close to 10% growth for us in Q3. So the good news is that the consumption of wine is diversifying across the country. You know, people used to point out that we were sort of a two-state horse, you can call us, but that is no longer the case. So Telangana sales have now equaled Karnataka sales in the previous quarter. That's a big deal. You can see definitely the diversification of consumer demand for wine across the country.
Got it. Rajeev, morning. Prashant here. Another investor I was speaking with was telling me that they got to ramp up distribution in a big way. I mean, the products have to be distributed much more widely. I mean, that's it. The demand is there. So could you tell us what's the strategy?
Yeah, absolutely. So look, over the last few years, we were very much focused on premiumization. Now, I do believe that we have reached a level where, you know, further we have to focus on our entire portfolio. To get the distribution going, we have to talk about our value wines, the lower value wines. Unfortunately, profitability does tend to be constrained when taxes are very high. So we do have levers to pull. We have a lot of levers to pull. One of the reasons for this margin fall is that the nature of winemaking, the whole, you know, setup in terms of expenses is very sticky. You can't just pull back from grape contracts, etc. But moving forward, given the sluggish demand, we're making a lot of changes. So we hope to bounce back in terms of distribution and in terms of margin pretty soon. The comparatives are now getting much better, in fact.
All right. Hi, Rajeev. Morning. Good to see you in. Rajeev, what about imported wines? Are they plaguing your sales? Is that a risk? Because there was some talk on that front.
Imported wines, of course, they are very much a part of the market, but I would not say that they are plaguing. In fact, I would say that among the domestic players, there was a level of unsustainable discounting. Now, Sula has taken the lead to start pulling back on the discount, and that's going to make the biggest impact, in fact, in terms of margin. And I hope that we'll be able to show something better in terms of margin in Q4 itself. We've already begun from January 1, pulling back pretty significantly in some of our key states in terms of the unsustainable selling and distribution expenses. And we do believe that we can do it in a very focused manner without hurting sales. So,
all right, Rajeev. Got that. So you're sounding a little bit optimistic, but the street would like to see some numbers. On a lighter note, you know, a lot of people looking at the budget, but a lot of them packed up from the budget and rushed to the Sula Fest. I believe after a while you did host that. So I think next time around, try not to clash
after
it.
After 5 years, and we had a sold out. It was the only sold out music festival in India this year. We had a terrific turnout, thanks to all our attendees.
All right, let's get two numbers before we let you go. You said margins will improve in Q4. Earlier, they were not sustainable. To what level do margins improve? And FY25 will be a washout year. No growth has come about. FY26, give and take everything, the pieces seem to be falling in line. What kind of a revenue growth can you guide the street for?
So I don't want to give anything specific, but I will say that definitely FY26 we see being much better than FY25. That's what I would like to say.
Margins?
In terms of margins, Q3 has probably been our lowest point in terms of the degrowth in margins. I would like to point out that in Maharashtra, the VAT subsidy, the capping of the VAT subsidy, that has definitely hurt us in Q3. So that's out of the 800 points or so decrease in margin, around 250 basis points is directly related to the VAT subsidy, which flows straight down to the EBITDA line. And that moving forward, we have put things in place. We now have more units, so we can up that part of it as well. So we definitely see Q4 itself, the fall in margins is not going to be anywhere near as dramatic as Q3.
No,
Rajeev,
so should we
just
expect 28%? I mean, you said 200 basis points. If I just, do the math,
250 basis
at least
points, yes.
250 basis points. So a recovery towards 29%, 28.5%, 29% margin possible in Q4 itself?
Look, I always said that 29-30% margin is a bit unsustainable. Sorry, I'm not going to guide towards that. But what I would say...
Okay, Rajeev, let me, so on the margin front, what you said earlier, you basically said that you kind of hitting the limits on premiumization. So the focus is going to be on, because last many quarters, last 2 years,
you've... the limits. I said that the focus that we put on now, we have reached a stage, we've got about 75% of our revenues now coming from our elite and premium range. Now looking at it, what we really need to, relook at the lower priced wines, find a way to pull the levers there on the cost.
And
there.
push
We have
them,
a lot
right?
of good ideas.
Yeah. So, but you also said pricing will be a little bit under.
Focus on all equally.
Yeah, but which means, I mean, there's no dramatic increase in margins. You in that 28, 29% kind of range, right? I mean, as you continue to focus on everything else, the lower end of the portfolio as well.
We see our margins improving pretty significantly from where they are in Q3. Let me state that clearly.
Okay, in that, you're not guiding to specific numbers, but I think as my colleague said, in that around 28, 29%, back to those kind of levels.
I'm not one to give specific guidance, but I think I've already said what I said.
Okay.
Improvement in margins.
Rajeev, is a buyback something that you would consider?
No, we are not in a position to do that right now. That's not on the cards right now. No, we hope to for our share price to go up with all the moves that we're doing.
All right, fair enough. Rajeev, we'll leave it there. Thank you very much for joining us and hope FY26 is certainly better as you're saying. And we'll speak to you again. Swiggy is what